Welcome to this webinar, this joint webinar between LedgerGurus and Settle, where we're going to talk about an e-commerce trifecta around inventory, bills, and business funding. So, by way of introductions, I am Stephen Brown. I am the CEO and the MC of today's webinar, and today's presenter is Pete Potsos, Senior Director of Accounting Partnerships at Settle. We also have a few people that will be helping with questions as they come up. So without further ado, Pete, I'm going to hand it off to you.
All right. Thank you very much. Welcome, everyone. Pleasure to be here. So happy to get in front of this great group. Love the team at LedgerGurus, and I'm even repping the brand today. Had the pleasure of getting this wonderful shirt at the LedgerGurus Summit, which was a wonderful event. So happy to talk to you about lots of things, but let's start like on something that many of you that are kind of in the CPG, consumer packaged goods space, are probably having to deal with now, or if you're thinking about getting into the e-commerce space. The best business day, you get a new PO from, let's say, Whole Foods or Walmart or something, and it's like, all right, now we got to get this thing filled. And so there's a lot of logistics and things that have to get done in order to make things happen. You got to cut the PO to get the goods. You've got to think about the labels and the packaging. You got to make sure that the POs are acknowledged so that people are making the things that you're going to need. Then once things start to come in, you've got the packaging coming in, the labels all geared up. And then you've got the bills coming in from the freight forwarders that you need to track and pay. Then once you get all your inventory that you're going to maybe assemble or have someone assemble for you, you got to create those work orders and make sure that the right quantities are built to the right sizes, the right flavors, whatever it is you're making. And then goods all get made. You're gonna create the goods. You're gonna get them to the 3PLs and then shipped, and then pay the bills. And then meanwhile, you're putting out money throughout the whole time, and you've got this cash flow gap because it's from the very beginning. No one's going to build anything until you get that built. And so these are the challenges that people are facing. Stephen, I'm sure you've had a few of your clients kind of deal with these situations. Am I missing anything?
Probably. I mean, I think the biggest thing I take away from here is that purchasing and the management of inventory is extraordinarily complicated.
Yeah, absolutely. And then, so what we've seen from different brands is like, they're trying to get all this done. They know how important it is to keep track of their inventory and the quantities on hand and the costs, because their accountants are telling them, hey, I need this figured out so we can get you a true cost picture. So they're using different point applications or solutions to piece some of this stuff together. And all of these are great solutions, but there's some complexity added once you're using multiple tools to bring all of this together. And then you've got to get all this fed into your accounting software and then communicated to your accountant. Many of the brands that we know and work with are utilizing an outsourced accountant or a back office team or partner like LedgerGurus to get all the work done. So a lot of time is spent chasing all of these things down, and the time factor involved with those things, the information gets less valuable the longer it takes to pull everything together. So this is costing you a ton of time and effort to pull it all together. And so what Settle does, and we're calling it the new Settle because we've recently expanded in terms of some of the functionality that we do, is to unify the entire e-commerce brand's tech stack. So all the back office tools that we've outlined that you'd have to touch in the previous visual, we have it all together. So the trifecta of inventory, AP automation, and then working capital financing. And then further expand the inventory, you've got the purchase orders, you got to receive that product, track where it's going, and understanding the costs associated with all of that, and then paying the bills, and then finding the cash to pay your vendors in a timely manner. So what specifically are we doing? So we are in one unified platform. We have all of your product SKU data in what we call a universal product catalog. In the platform, you can use that to create your purchase orders, track the work order, and create the work orders that you're sending out to your co-manufacturers, the inventory transfers and the receipts on those transfers to the various third-party logistic companies, the ability to accurately forecast based on your needs at the SKU level by location, having one place where your purchase orders, invoices, and payments all come out, all linked together. And then within the platform embedded, when it's time to pay, you have the ability to use your own funds if needed, or reach out to us and get approved for a working capital line of credit. All of this syncs to your warehouse management systems and your sales channels to bring it all together so that you can scale in a more efficient manner. All right, so where does it all start? It starts with the product and the universal catalog. So before we get into it, we do have a poll. If you hopefully see that here, do you issue purchase orders when ordering inventory today?
Yeah, so this is a curiosity, an itch we want to scratch. How many of you are using purchase orders with your vendors when you are ordering product? So let this run. Go ahead and keep going, Pete, and we'll just let this run in the background for a minute or two.
Okay, perfect. All right. So where does it all start? It starts with the universal catalog. And so this is the hub for all of your finished good, raw materials, your bill of materials or BOMs, kits, all in one place, all the different sizes, flavors, all of the components, the labels, all of those things need to get tracked and in one place. Now, I know a lot of you are doing that in spreadsheets, but we have that here in one place, and we use this as the launching pad for the creation of the purchase orders that it looks like most of you are using. Congratulations. I know my accounting teacher would be proud that you're doing that. And so we have everything in here. All the variants are kept in here. And a lot of it can be kind of brought in via imports, or if you're using Shopify, we can actually, bring in all of your catalog and all of the variants through that connection. So you don't have to do a ton of heavy lifting, and we bring that in. And then we connect with the different warehouse management systems so we can sort of translate, if you will, to whatever. So if you've got a different name for an item at a WMS, warehouse management system, we can sort of translate amongst the different systems. So you have one place, sort of like, I call it the Rosetta Stone of keeping track of all the different SKUs. Oops, sorry. So next after that, gosh, sorry. Is the creation of the purchase orders. So the purchase orders are sort of the hub or where everything begins, right? You've got this agreement with your vendor on what the costs are going to be, right? It's built off of the universal catalog. So if you need a specific size, the system knows that based on that variant that it's going to have different color thread or packaging required to do that and create that. So the creation here, we've ordered all of these different sizes, and it's got all of the associated SKUs and naming that goes with that particular vendor, so you can send that out. But the other thing that we're doing here, which is unique, is that this is where you start estimating or figuring out what your landed costs might be, and then ultimately true those up later. So if you're bringing it in from overseas that you're going to have some shipping costs, you're going to have potentially some tariffs now that you have to think about, or maybe setup charges. You can do all of that here at the PO level, and you may not know the actual costs, but at a minimum, you have an estimate that you can use based on information that you have or know is going to happen to accurately compute a landed cost for later, for your inventory valuation and such. So it gives you visibility into your future spend as well. So that way, when you're trying to figure out what your cash flow is going to be, you have that, and it all starts here. And then the one thing that we're doing is we also have purchase order approvals now, so you can route the POs to various people within the organization. So you've added some visibility to your ordering, and this is just like something that, as an accountant, and what would really help your accountant is knowing in advance that when you make a payment to a vendor, your accountants see the $50,000 or whatever that you just made a deposit on, because they're reconciling your bank statement, but they have no idea as to what it is you just paid for. And so what you can do to kind of help your accountants is, like, if you can make the PO deposits directly from here, and it'll record that payment in your accounting software, and we know specifically what vendor we're paying, and we're actually treating it as prepaid inventory as opposed to inventory. Just a pet peeve from us accountants. But this is something specifically, like when I first met Stephen and Brittany, like this was like the one thing that they really, really wanted to help make the accounting that much more efficient for them, so they're not chasing things down. Um, Anything you want to add to that, Stephen?
No, I mean, I think the elegance of what we're talking about here is being able to do things in one place, and as we see, what we do here will flow into other activities around inventory.
Yeah, yeah, absolutely. All right. So from here, so the POs, you can send these off to your vendors. We've indicated that we can make the deposits right there on the PO that are categorized as prepaid inventory. And then just from an accounting standpoint, it just simplifies a ton of things. And you know what's been paid on a PO. If you need to make another deposit on that PO, we're tracking all that and keeping all that together. Oops, going the wrong way. Then finally, okay, so you have your purchase orders, and one of the reasons you're using your purchase orders is that you've agreed to a certain quantity and a price up front with your vendor. The goods received note or the bill of lading or a packing list comes in, and they didn't ship you everything that they said was on it. So you got to account for that somewhere, and then hopefully not pay for that. And then when the invoice comes in, you've got to make sure that they charged you what you agreed upon up front. And so with Settle now, we have automated three-way matching of all three of those documents, where you can see all of that in one window, one place, And you're probably doing this, but if you're not, the system is going to catch it. And we've found across our brands that those that are now properly using purchase orders and the three-way match and receiving, that we're identifying up to $270,000 in discrepancies that may or may not have been caught, but manually. But why not let the system do that for you?
So, Pete, I've got a good question. There's a couple questions that have come in. This one's really timely. Uh, if somebody's using a different system for POs, how would that work with Settle?
Yeah. Yeah, you can actually upload your POs into Settle. And we also are integrating with the WMSs. So, like if you're receiving outside of the system, those goods received notes do come in through the warehouse management systems as well, too. When you upload your purchase orders into Settle, we're actually going to line level scan each of those purchase orders. So that becomes part of the system. And then when it does get received and it comes in at the warehouse management, we're going to see that and we'll be able to match that. And then when the bill comes in, then all three of them will match. So you can upload your POs into the system from other systems. Okay. All right. So you've got some orders now, and we gotta create some products. So within the system, we do have uh, work orders that are built off your catalog. So the bill of materials or BOMs are all in the system. So that when you go to send something off to your co-manufacturer, it's all here. And then on top of that, there's going to be additional costs potentially that you need to capture and allocate across all of the items that are being created. So we have the ability to capture additional landed costs in the process here, and then attach any particular documents that you need to those work orders. And so a good way to keep track of inventory. So sometimes some of the co-mans don't have a great reporting tool on that, but by using the system, the tool, we can track the movements in and out, and it'll help you get an idea of what's in different places. We do have integrations with the various sales channels, Shopify, Amazon, Walmart. We're expanding it to others as well too. So all of that's coming in and relieving the sales, so we know what's been sold. So you don't need to import, export any of that stuff. It's all coming into the system. And then going the wrong way. And then we're also using the purchase orders to start and all of this information to start doing inventory forecasting. So based on what's coming in, what you're selling, you'll be able to look at and plan out what kind of demand you'll need and prevent the potential stock out. So again, one platform, you're not trying to do this in another system. It's all within Settle.
So here's another question that's relevant for now, Pete.
Sure.
You've got one PO, but different shipping times on that order. So you got maybe half your order comes in April, another half comes in June. How does Settle handle kind of split receipt of orders?
Yeah, you can actually have um, multiple shipments, and then also the invoices might have um, multiple multiple shipments from different POs coming in as well too. So we're taking care of both. But yeah, you would still show that the PO is still open and there's items still outstanding. So they're not closing out the PO based on partial shipments.
Awesome.
Okay. All right. So now, because we've been tracking by the SKU level. We know we have inventory in different places, either at the co-manufacturer or the 3PL. So we provide an end of month report via via the system that gives you the uh, the cost of goods sold with landed costs by SKU by location. So this is an example of that report here. So you can see the SKUs, the different locations in the third column here. What was your inventory at the beginning of the month? What's been received? What have you used to assemble or manufacture, transferred, sold? And then, this will give you your cost of goods sold based on the first in, first out landed cost method, and then any write-offs, and then based on what's on hand at the end of the month, your an accurate valuation of your end of month inventory. And
And
so
for
then,
those of you that are accountants, this will make a lot of sense, and you're
yep,
probably like, cool. For those that of you are brand owners or working in a consumer products business and wondering why it's so hard to get good cost of goods sold from your accounting team, it's partly because the flow of information is so gnarly. And so one of the things that we really like here at Ledger Gurus about what Settle's doing and continuing to progress on is streamlining this process and making it easier from an accounting standpoint, not just an operational standpoint.
correct. Yeah, that's it. And I'm sort of oversimplifying it, but yeah, at each one of the points, there are costs that are coming into the picture. Yeah, your initial order, the freight coming in, the freight going to the different locations, um, showing what's on hand and getting pulled in automatically from the different warehouse management systems. It's much more timely. And then and at the end of the month, it's really when you want to get a good valuation of what you have, so you can get a good idea of what your gross profit is fully loaded with landed costs. And then, you might now, and this is probably, I was listening to one of your episodes, Stephen, on tariffs and what's going to happen in the new administration. Like each tariff or potential tariff is going to add a ton of cost. And now if you're not taking a look at your pricing on a more timely manner, you could get yourself underwater. And so having this on a monthly basis essentially is going to give you 12 opportunities to adjust your pricing if there's elasticity there, right? If there's room to increase your prices, or potentially do something different with your shipping or negotiate better freight costs and things of that nature. So essentially, this is showing you all the different things, but having this will, at the end of the month, better demand planning, better visibility into your costs, and then journal entries that can be booked by the accountants and trued up, as part of your financial package. Now, some additional. Oh, sorry, God, my mouse is super sensitive. I got it on racetrack mode. Uh, let me just switch to my. All right, my mouse has been fired. These are all the different integrations that we have, and we are adding them, pretty quickly, a few a month. So if there's something that's not here, we can work on getting that added. But through that integration, it's a two-way sync of the locations, the SKUs, the quantities, the advanced shipping notices, and the actual shipping receipts are all coming in, so you have visibility in one place.
So, got another question from Tiffany. Tiffany's been serving up some really great questions. What
Nice.
if your warehouse system can't be synced to Settle? We have to manually input and edit the inventory each time it's shipped, or can it be caught in the sales channel like Amazon?
Yeah, so yeah, then you're gonna at least have the outbound coming through the sales channels, so you'll be able to do that out. You can make manual transfers within the system between the co-man and your 3PLs. So you have opportunities within the system to adjust and transfer the amounts.
Cool.
Okay. All right, coming soon. So, one of the things that we're really excited about, and sort of again, Stephen and Brittany sort of encourages, like, hey, you really need to figure out a way that to work with A2X. A2X is a great solution for helping you do the revenue reconciliation. You know what you've sold, but do you really know all the costs that are associated and what's actually hitting your bank account? And so A2X does a great job of posting sales, net sales, and all the costs and fees or whatever on a daily basis. But now what we're going to be able to do is feed them the weighted average landed cost of each SKU. So what they're doing now then on a daily basis will be able to post not only the sales side, but the cost side. So on a daily basis, you'll have visibility into your cost of goods sold on actual items sold throughout the month. So a great way to kind of take a look at what's happening, and then it's trued up at the end of the month. And because of this partnership integration, we even have a approach now where we can provide you with product cost without inventory management. So at a minimum, if you're not into like a more involved inventory management system, you can use what we call our product cost catalog or product cost report to give you the landed cost of your inventory, so that way you can essentially, keep an eye on your costs and making sure your pricing is going. This is actually computed daily. So, a brand could start by, could come in and maybe they've got their inventory set up in Shopify. They can connect their Shopify to Settle, and it'll bring in all of the SKUs. And then, if you've been keeping a spreadsheet of your cost and your sort of landed cost estimates, you can plug all of those into Settle using a baseline cost. So it's sort of like draw a line in the sand, put in your baseline cost of what it is in a moment in time, and then start using Settle for purchase orders and then payments without even having to connect to a warehouse management system. It will give you the essential, what I call landed cost accounting, that the accountants want in order to help you, make sure that you're keeping, an eye on the product and your gross profit. So, sort of a simplified approach to dealing with this before moving into a more involved inventory system.
We had a couple questions here, Pete. One is, do we have a date, an approximate date when the Settle and A2X go live will happen?
Yeah. We've done our work on our side, and now the A2X team is going through and going through the connection. We've got some folks that we've identified for beta. We're looking at the end of February before it's or beginning of March for general availability. So that's the timing.
Okay.
As of yesterday. So we should be getting an update soon. So bill pay.
Let me
All right.
ask a question before we go on, just so we can determine how fast we want to go through this section. One of the other things we're going to talk about is Settle's bill pay capability. So you're doing all this inventory stuff, and you need to pay the bills. So we want to understand how many people are using automated bill pay solutions versus using just traditional methods. So if you could take like We'll go about 30, 60 seconds. This will help us understand how quickly we want to go through this particular section. So thanks to the 5 of you that have responded. It is multiple choice, so if you are using multiple methods, we'll be able to see. But I think the biggest thing we're looking for is whether you're using an automated bill pay solution, either something like a Settle, there's other solutions out there like Bill.com or QuickBooks Pay, or the bank portal tool. Bank portals often have tools.
Yeah.
So far about 50% are using it. So I think let's go through semi-briskly on this one, Pete. Feel free to keep answering if you'd like to give us your thoughts. If not, we'll just move right along.
Yeah. Yeah. So you can actually bring in bills from different ways. Like if you're using QuickBooks Online, for example, bills entered there will feed into the system. We have an inbox, an email that's dedicated to the account where you can have bills forwarded or uploaded to the system. You can essentially use us to make the payments as well too, but if you are making payments outside of the system, that's okay too. The benefit here is that we are line level scanning all of the bills. So, we talked about using purchase orders and having the goods received note. Well, wouldn't it be nice to know whether or not the pricing that was promised was actually invoiced? So we have the ability to line level scan and take advantage of that matching. We have different ways to pay. Our fees are really low and reasonable in terms of our fast pay. We also do domestic wires and then international payments, or we can mail checks as well too if you wanted to. We did tons of controls across using different trigger approvals like amounts, the category, the class, who created it. Maybe there's someone new and you want to verify everything that person enters, location, vendor. You can have different payment rules that are stacked on top of each other. We have purchase order approvals, bill approvals, and payment approvals. So like maybe you have a different workflow for approving the bill, but then you've got, depending on the amount, different people that need to look at it to approve the payments themselves. We also do recurring payments, so an easy way to just send money out. That just needs to be ACH. It's the monthly rent. We can do that pretty easily. We do consolidated bill payments, so you can pay multiple bills at the same time and keep your transaction fees low. And then one differences from some of the solutions, we just looked at one here, but when you are purchasing inventory from overseas and you're paying in that foreign currency, there's a foreign currency exchange, and just based on rates, we're very competitive here. We're saving on average 1,500 to 2,000 per $100,000 in your cost of goods, your inventory. So offering a ton of savings there for brands as well. We also now are making the W-9 enforcement and 1099 end of year processing work go a lot easier. We use Settle, obviously, internally to pay our bills and pay out our partners, and just going through the exercise of making sure everyone had their W-9s in place so we could issue our 1099s, and the system collects the W-9s systematically. Like they can upload the W-9, who has and hasn't uploaded their W-9s. They can also do it electronically, so they don't have the form. That's not an excuse anymore. They can go in and enter their federal tax ID number and their business name and get everything entered electronically, and that will suffice for the IRS so you can create and issue the 1099.
Let me just put two points here. If you're not using an automated bill pay solution, accounts payable solution, we've been doing that with our customers for years. Many years ago, we had a customer that was just cranking out bills. Or payments. They just had dozens of payments a week, and we were cutting checks for them. And we did a before and after analysis, and it literally takes you about 30 minutes from start to finish if you're doing checks, believe it or not, because you got to put it in a system, you got to print it out, you got to sign it, you got to put it in an envelope, you got to stamp it. And so using an automated system, it just streamlines things. So definitely put that on your radar. I know a lot of people when they're starting their brands, their businesses are running off of credit cards, but the minute you start getting into wires and ACHs and checks, that it just consumes time. The other thing I'd say about an automated solution like Settle is just the controls, right? If you have other people involved in the process, you want those controls so that you're um, being able to separate who's doing what and assure that your resources are going well. Now, a question said, does this replace QuickBooks? No, this is syncing with QuickBooks. So the bills that are created in Settle go to QuickBooks, bills that are created in QuickBooks go into Settle. And in terms of syncing, you do set with this solution, you're setting up a bank for sending out payments and essentially authorizing that it can uh, hold, send those payments out on your behalf.
Yeah, and I'll say this is like, do we have people that use Settle without QuickBooks? Yes, we do, because we can move money. We do connect to the bank accounts. However, you do want a general ledger. You need to have reconciliation of your bank accounts and the tracking of your cost of goods sold to certain accounts and so forth. And so having an accounting system, like QuickBooks is still sort of essential just to make sure that you're getting your profitability reports and such generated in a timely way. So there are people that are trying to create reporting without a GL. But this is a system that many people know and can support you like Ledger Gurus. Obviously, they're using QuickBooks Online for probably most of their clients.
All right, let's go to the next section, Pete. While we do this, I'm going to launch our final poll. So, out of curiosity, what are you using for your lending when you're financing inventory purchases? This is a multiple choice, so if you have multiple ways of funding, love to hear that. So it looks like we've got a little bit of everything. We've got a self-fund, bank line of credit, got a merchant cash advance, SBA loan, private lender, friends and family, a little bit of everything. So let's talk about what Settle's working capital product is and why it's interesting.
Yeah. So Settle's product is a working capital line of credit. So essentially, once you're connected to Settle, we can take a look at your bank, your QuickBooks file to see kind of where you're at in terms of profitability or inventory on hand, receivables, whatever, the different ratios. We can underwrite and look at the information to give you and make a decision on whether or not we can extend you a line of credit. So, based on the financials, we're looking at $1 million, whatever, anywhere from 50,000 on up to whatever you sort of request, and then we'll try to accommodate. And the rates on this are very transparent. It's between 1% to 2% depending on your credit, your position, so forth, and we make that decision. And
1 to 2% a month.
1% to 2% per month. Yeah, yep. And this is like a true simple rate. Like it's not. Some people will quote a number, but we'll get into the how APY is calculated. But this is compared to other line of credits that are out there that do interest daily based on what you've borrowed and not necessarily used. And so you get approved for a line, and you only get charged interest on what you use. And so at the time of payment, you've got a $50,000 deposit you need to make on your purchase order. uh, you can make decision to use your own funds, or or use Settle to finance that inventory. And so we pay the vendor. They don't know any different that that you had to essentially borrow in order to pay that. And it's a micro loan payment, or if you will, or a micro loan, not micro, it's like a mini loan, if you will, for each payment that you make. And so we're looking at, what did you borrow at the time of borrowing, and computing the rate. And and you can pay it early or not, but it's on your terms. So we extend out that timing out to 180 days, and you can pay a fixed rate, or you can amortize over a period of time. What it's not is what we'll call a merchant cash advance, where where you're getting capital, and then it's being collected from your sales. There's lots of different merchant cash advance loans, or MCAs as they're called, that seem like they're just like they're giving me money. I need the money. Like I should take advantage of it, and it's just a simple way to collect. But what happens there is that you may have, used the money to do some ad spend, and all of a sudden your sales spike, and now because they're taking a percentage of that loan, you're paying that money back faster than you anticipated. And that rate that they gave you was really an amount that's fixed, set, regardless of how quickly it takes for you to, how quickly you pay that back. So in essence, like what's happening is that rate that they're quoting you, when you factor in the time, it could go up to 100, three digits, like in terms of what the actual APY is. And in ours is fairly simple. It's the 1 to 2%, so it's going to be between 12 and 24% in terms of your cost of capital there. Just an example of what of what a term, or one example might be here is here's like where someone has paid an invoice for $50,000. We to extend it 30 days, and you are or extended 90 days, and so your total fee is going to be what's calculated here. And you can amortize, like a loan payment if you want as well, or just pay the interest for each extension. So it just makes it very easy to account for and track, because it's all within the system, and we send all that information back to your QuickBooks, so it's keeping track of all the fees and payments that were made. In terms of the growth of how it's helped businesses, like these numbers were a poll that we did, or looked across the growth, and saw, when having this simple, transparent, non-dilutive capital, that businesses were able to grow 385%, because that's the biggest challenge. And that's taking it back to that very first slide that I showed, is how do we eliminate that cash flow gap? We're helping you here by doing that with this product. And so our unique value proposition is that now, with all three of these things together, we're saving you time in terms of the managing of the SKUs, tracking the inventory, all the vendor interactions, calculating your cost of goods sold, providing you with the working capital to fund those purchases. We've got all of the rates, that we showed you before on the foreign exchange. So there's lots of opportunity here to simplify and save costs across that entire workflow that we showed at the beginning. Pause there. Any other questions?
There was a question earlier, just to reiterate, and Michael answered it in the chat, but um, this is only for U.S. corporations currently, correct, Pete?
Yeah, or if you have uh if it is another corporation but they have a US subsidiary, like, and you have bank accounts that are in the US, you can use Settle that way. But right now, other than that, we're US based
And
companies.
you may have mentioned this, but just to reiterate, does Settle require personal guarantees?
Yeah, it's a good question. I'm not on the working capital team. Maybe Michael can stand up because he's answered that question, but typically have not seen that.
No, we do not. There's a question in the Q&A for you guys too, if you want to check it out.
Do we suggest using Settle as a startup? I
Yeah.
mean, he's probably going to say yes. I mean, my question would be to you is like, there's a number of things. Settle has a number of capabilities, and I think some will be more important earlier than later. I think as you mature as a business, you're going to need all of these capabilities, but I think you can look at, maybe what your needs are early on and go after that. Maybe Pete talk a little bit about how the different, package offerings of Settle are. It's not an all-in-one. You can kind of buy in different
Yeah.
capabilities.
Yeah, you could essentially just come in for your bill pay. Um, if you are starting to get some, multiple SKUs in and you want to start tracking, or maybe you have some, um, a need for a co-manufacturer to assist you with the assembly and so forth. Clearly, that's a great opportunity to start tracking the landed costs associated with that and the different, the bill of materials that goes out. So it adds some simplicity right out of the gate. And then, as I mentioned before, though, you could literally, if just once you open up your Shopify store or whatever, you connect to Settle, it will import all your catalog items from there, and then you start using us for purchase orders, which we most of us are using here and should use, and then the bill payments, and then at a minimum, you're getting weighted average cost of all your landed costs. And then when you're ready to work with Ledger Gurus to do your accounting, they've got a good history of everything that you've been spending on. And so then they can really start to help you with your reconciliations and reporting and advising that they do in terms of their packages. And then it's like, okay, well now I got inventory in different places and I really want to track the movement. I want to move to more, FIFO, more advanced inventory calculation. Then you can move into our inventory management tool. So we have like our bill pay, our launch plan, our accelerate plan, which has inventory movement and management, and then there's another package. But yeah, to answer your question, yeah, yes. If and you've got a great product and it's going to take off and you're in it for the long haul, I believe there's a strategic coach that has this great way of thinking about things. Is you think about yourself at 10x, and if you were 10x the size you are today, what are the systems and processes that you would want to have in place at that point? And then, and once you identify them all, like usually there's going to be something around your automation and tools, and you're going to have an inventory management system. You're going to have a good accounting software and accounting partner and all these things in place. So it's good to start taking advantage of those things sooner rather than later. How long has Settle been around? Settle launched, reformed in 2019. We do have 2020 came out with our product. COVID, while an unfortunate time for a lot of us, it was a very fortunate time for consumer brands selling online. And so we had immediate product market fit and grew with our working capital and bill pay solutions. So 2000 is when we launched publicly. Here are some of the brands. Some of these are great Ledger Guru clients, but some great brands on here. This jacket, this Affinity jacket, one of our brands that we work with. A few others are on here too. So we've got some great brands that have trusted us for over the years, and we've helped them grow, and it's been fun to do that and be a part of that. And in terms of getting started, you really have the three ways you can do that. You could just start using us for bill pay, and it's a matter of working with Ledger Gurus to have them set up your account for you. We have great pricing and a great offering for our accountant partners that have clients that want to use us for bill pay. You are gonna connect that to your bank account and your accounting system, and then you can start entering bills right away and paying those bills. You could just use us for working capital if you have a need and want to explore or compare to other alternatives. Again, it's as simple as getting an account set up, connecting your bank account and your accounting software, so QuickBooks, and then we would you'd make a request for what kind of money you were looking for, and then we would take a look at it and underwrite it if you're in a good position. Sometimes you're not quite right, or you need some cleanup, or to get your accounts in order, and so someone like Ledger Gurus could help you kind of get your house in order. And once we see that you've got your inventory up to date with some good, proper adjustments and valuations or whatever, if you haven't touched your inventory account in 6 months, and probably something's not right with your inventory accounts. So having a good accounting partner can help you with that. And so we've seen some people come to us where we initially might get denied, but then after some cleanup and getting the accounts reconciled and so forth, then they come back and we approve them in the future. And then if you decide, hey, look, we're ready to get into an inventory management tool, then it's a matter of getting your account created and your catalog connected. We like to start with your Shopify, for example, or Amazon. Bring in the data from there because you've got that organized a certain way there. Then we connect your warehouse management systems, or we can help you. We can give you white glove assistance to set up your catalog, and then you'll finish setting up some of the other sales channels and so forth. And then once those are going, then you can start using purchase orders and payments, and then using our system to track the movement of your inventory. So this is sort of the order that we suggest.
Awesome. Any final questions as we wrap up today's presentation? Okay, what's the best way to get in touch with Settle if people have more questions or want to explore any of the offerings that you guys showed here, Pete?
Yeah. First of all, if you're working with Ledger Gurus, then you should reach out to Ledger Gurus and let them know that you're interested in moving forward. They can set up the account and get our solutions architects involved. Michael can assist with a demonstration, and then get that going. If you are working with another accounting firm, have them, let us know. We'll work with them, and we have plans in place. You could go to settle.com and go there and make a request, or you can reach out to me. My name's Pete Patsos on LinkedIn, and say you saw the demonstration and would like some more information. 3 ways to get a hold of us.
Do you have any pricing information, Pete?
Yeah, I would like to share that. I mean, you can start as low as $49 with bill pay, And then we have pricing that's available for our accountant partners, but we could share that individually based on what your needs are. But starting as low as $49 to different layers, 149. And pricing is also available on our website too. But through our accountant partners, there are preferred programs and in place where we're passing on discounts through the accounting partner. So that's why I mentioned that if you have an accountant, let us know, and we can work together to help them onboard and get you situated.
Okay. All right. I think that's everything. Thank you for all of you who joined us today. Obviously, you can reach out to us afterwards, and we look forward to speaking with you in the future.
Yeah, I loved all the great questions. Thanks for sharing, everyone, and hopefully learned something, or hopefully we can help you out. Thank you, Stephen and Kelly and Courtney for setting all this up, and Michael for hosting the questions.
All right. Till later. Bye.
All right, bye bye.